for the rally that we are seeing in BHEL at this point of time?
Okay, that's just refusing to accept what the tape is saying, perhaps. But I mean, half the price, their target price is half the current ruling price.
So many of these companies, you know, their current valuations don't support the projected earnings growth. So it's scary. I mean, it's good to caution our viewers about the moves.
Absolutely. It's all based on hope that a new government with a stable majority will be able to make a big change in the macros. But Ekta, two banks which came out with numbers. Let me start with the good one first, Bank of Baroda.
Okay, for Bank of Baroda, Lata, there's no ratings change. There's no ratings change for PNB also in terms of the brokerages that I've read. But they've increased their target price because they've rolled over their estimates to FY16 as opposed to FY15. So, for example, for Bank of Baroda, Religare, they've said that it is the top pick within the PSU banking space, revised the target price to 975 rupees, have maintained their buy. They believe that it's a buy despite the premium valuations of one-time FY15 price to book as compared to the other PSU banks, except for SBI. They believe Q4 was a beat in terms of estimates. They're very positive on the Tier 1, which stands at 9.3%. Macquarie raises the target price to 625 rupees versus 415 rupees earlier. They've maintained their underperformed rating for Bank of Baroda, however. And for Barclays, they've maintained their equal weight and raised the target price to 784 rupees. They believe that the Q4 results were strong. Asset quality formation in terms of stressed assets was lower sequentially, which was a positive. Now for PNB, I'll just go back to the point that you guys were making before you all tossed to me. Barclays has written a very interesting title to their report which stood out for me. Meanwhile, in the real world, ... Because, you know, that's probably the real situation in the PSU banking space. So for Barclays, they maintain their equal weight on PNB. They've raised their target price to 680 rupees simply because they've rolled over their estimates to FY16 versus FY15. Weak Q4 numbers, and they pointed out a very important point, Lata, where PNB has a large pool of restructured accounts, which is around 27,700 crores, which is ex-SEB and Air India. So these accounts will soon exit their moratorium soon, and that will put pressure on the asset quality for PNB going forward. So it is not a done deal in terms of asset quality pressures being lifted in FY15. Macquarie maintains its underperformed rating. Target price revised to 680 rupees. Religare has a maintained hold. Target price revised to 800 versus 700 earlier.
Yeah, actually, it's dramatic. Punjab National Bank's second largest state-owned bank was a dismal performance. The third largest private public sector bank, Bank of Baroda, improved on all parameters. Yeah. It's a little difficult to accept the situation. They're all lending to the same economy. So it's a little baffling, that set of numbers.
All right, but Reema's also with us. Reema, what stock do you have on your radar?
Well, I have Tata Communications on my radar. They came out with their earnings post-market hours. Overall, it's a mixed set of earnings. So revenues were higher than what the street was estimating. Also, it's commendable because this quarter had fewer working days as compared to the December quarter. Margins, however, were disappointing and lower than what the street was estimating and across segments, in voice, in data, as well as in Neotel. But the street perhaps could focus on the bottom line, where there is a loss of about 123 crore, and that is on account of a 150 crore write-off that the company has taken on impairment of the Neotel goodwill. Now, Kotak has reacted and said that this is a mixed quarter, but the stock returns will be determined by whether discussions with Vodacom on a potential Neotel stake sale consummate in a deal or not. But maybe the street will focus on the loss and could be a bit disappointed. Back to you all.
Right, Prima, thanks for that. So Tata Communications will be in focus, but Lata, again back to you, and SKS will be in the news today.
Yeah, I mean it's a well heart-moving news because it appears from newspaper reports, an Economic Times report, that Vikram Akula, the poster boy of microfinance and a dominant owner of the only listed stock, is likely to be moving out. Apparently word is out to one of the investment bankers asking that they sell off the entire stake of SKS Trust Advisors, which is the entity through which Vikram Akula holds a lot of shares. So if they sell, it looks like Vikram Akula has finally thrown in the towel. He's already distanced from the running of SKS because of differences with the directors and some other shareholders as well. This would be a definite, cutting of links altogether. I'm not very sure the stock will move much because Vikram Akula has distanced himself, or has been distanced from SKS Microfinance for a goodish bit, but those shares are in the market. That may be a bit of a dampener.
All right, let's go across to Varinder now. He's also standing by. In fact, yesterday there was a big move that we saw in many infrastructure names, Varinder. Tell us about the delivery statistics. Was there real delivery-based buying or was it just speculative trading?
Well, Sonia, just before that, a tale of two cities for power stocks. BHEL, we have been discussing, the stock was up 10.5%, but the delivery percentage in this case was only 18.5%. Look at NTPC, stock was up 1.5%, only came up from day's high. But in this case, the NSE delivery volume was up 4 times at 1.6 crore, highest in 2 years, and the delivery percentage as high as 62%. All the infra road developer stocks, in NCC, HCC, IVRCL, you saw the delivery percentage hovering around the 35% for most of these stocks. But the stock which saw the maximum delivery in absolute value was HCC at nearly 77 lakh shares, IVRCL second, which was nearly 65 lakh shares, and the third one was NCC. Again, in all these three stocks, you saw nearly 3 or 4 times jump in, if you have to compare with the 10-day average. And the last word on Adani Group stocks, you saw trading happening in Adani Enterprise, delivery percentage very small at 15%. The best delivery in all the Adani Group stock was Adani Ports, which was at 40%, and there was nearly 4 times jump in terms of absolute delivery volumes.
Yeah, but actually that has been the story of Adani Ports, isn't it? Of all the stocks wherein Adani Ports has seen volumes actually delivered on the exchange. Okay, Nimesh, you have spotted a big block deal in M&A?
Well, yes, Lada, that's the done deal. It looks like there will be a block of 70 lakh shares in Mahindra & Mahindra today. One of the large FI investors, Goldboot Holdings, which is an arm of Goldman Sachs, they are selling part of its holding in Mahindra & Mahindra today. I understand from sources that the book was launched last night and it closed last night itself. So there was a pretty strong demand from the global investors for this block. The price band, what suggests in the book is between 0 to 5% discount to yesterday's closing price. What this means, Lata, is even at yesterday's closing price, the block deal size is close to 850 crore rupees. So pretty strong, demand is what I understand from investment banking sources. Goldboot Investment, as I said earlier, is an arm of Goldman Sachs. They were holding little over 3% stake. So they hold close to 1.9 crore shares, and they are selling 70 lakh shares in this block deal. So pretty much, close to 40% of their holding is what they're looking to sell in this block deal. The deal will get executed today in the morning trade at 9:15 because as I understand, the book was already closed last night. So watch out for this particular stock. If there is no big discount, you might see the book, the book getting sold pretty easily, as there was a very strong demand from global investors last night.
All right, Nimesh, thanks a lot for that. And now to Ushang, our man for all work. You had a lot of results to look at yesterday, but you think GSFC was the best?
Yes, absolutely. I wouldn't be surprised if 5-7% up move is there. And if you look from the perspective of the profit which came in for the quarter, it jumped up by almost 129.5% at 134 crore versus 58.5 crore. And this was mainly led by the industrial product segment of the company, where the profit has jumped by nearly 730%, coming in at around 141 odd crore. But at this, the quarter went by, the fertilizer business profit or the revenue did witness some amount of a hit, where the sales have actually come in lower by around 30% odd at 837 crore versus 1200 crore year-on-year basis. Now, this may be attributed to the lack of availability of the gas, which has been impacting most of the players in the fertilizer segment as such in current point of time. Additionally, what has supported profit is the other income, which came in higher during the quarter. At the same time, there has been a reduction in the interest cost. This was mainly led by the reduction in the short-term borrowing of the company, which is currently at 525 crore versus around 1266 crore at the end of the March 31st. And also keep a watch upon the expenditure, which has come in pretty low by around 17% lower at around 1358 crore odd levels.
All right, Ushang, thanks for that. Well, Ushang has a knack of spotting stocks which move the hardest and the fastest. So we'll watch out for GSFC. But thanks, guys. We've gone on for a goodish bit. Let's recap our top 10 stocks today. BPCL, Indiabulls Real Estate, SBI, BHEL, Bank of Baroda, M&M, Tata Communications, NCC, NTPC and GSFC. In case you missed them, we'll do a wrap of them again post 9.